So today with me, I've got Giovanni Amodeo, who has a rich background in financial data, news, and analytics with over 23 years experience in the industry. He's currently a part of the executive team at Ion Analytics and is responsible for engaging with influencers in the capital market globally across various assets. Giovanni has organised numerous fireside chats and exclusive events aimed at facilitating connectivity and knowledge sharing amongst the industry influencers. His career with Ion Analytics began in 2001, and his role has expanded across Italy, Germany, London, and now he resides in Sydney, where he manages a global team and engages with a wide network of professionals. Welcome to the Deal Giovanni.
Thank you, Sarah, for having me. It's great to be here.
It's a wealth of knowledge that I feel that's in front of me, and we've worked together on a few different things, and I've loved it. But I'd love for you to share. So you've worked in Italy, Germany, London, and now here in Sydney. So tell me, how do these international experiences influence your approach to the financial analysis and market communication?
So you look at how people behave differently in the different countries. So Italy is very relational. So you start from engaging with someone, building that relationship for a long time, and displace that relationship either in financial communication or in doing deals is not that easy because that relationship is formed very strongly. So once you have that relationship, that's there forever. In Germany is similar. In UK instead is more transactional. What is the best thing you can do for me in that particular moment? So you can see people dealing with different professionals over their careers, and that could be financial professional, PR professionals, and so on. Is more transactional. In Australia, I've been here only for a few months, so I'm trying to discover what are the similarities with Italy, Germany, or the UK, but it looks like it's a bit more like the UK.
Right. That's so funny because I always felt when we're doing business and you're talking to someone that you do have to build that relationship in Australia first before you can be transactional. Whereas I feel that when you're doing business in America, you can be transactional and then build relationship after. What's your opinion of that?
Yes, I totally agree with the US is you are providing value to me. Yes, I give you time. You're not providing value to me. I'm not giving you any time. But by here in Australia, people are more willing to give you time to listen and to form their relationship. I think
Yeah, right.
Italy and Germany are on another level. So it takes more time.
Okay.
It takes more time to build that trust, that relationship, but that relationship stays forever. And for someone else to come in is not as easy as it is in Australia and the UK.
Yeah, so I think in Australia, it is relatively easier by the sounds of it to build that trust and relationship first. Unless it's broken, then I think then you're done. But I think if you can maintain that, then people do trust. Like it surprises me how much, you work with someone and they're willing to give you their time. And I feel that if someone's giving you your time, that is trust.
Yeah, I always think that if someone spends time building and crafting a very personalized email, trying to understand what your problem are, people in Australia are willing to give you that time to listen to you because they know and they put themselves in their shoes and say, okay, look, you've done this effort, you made this effort, and I'll give you the time. In
Yes.
Italy, if you don't come from an introduction, it's very difficult to penetrate unless you have a name. So for me now, it's much easier because I have a brand name in the financial community in Italy. But when I started my career, it was almost impossible.
Wow. Wow. So did you then have a mentor that helped you to get your name out there?
No, it was a matter of trial and error. So I was much younger. I was in my late 20s, and I actually relocated from the UK. So I started my career with the company in 2001 in London. And after 18 months, I relocated to Italy, and I was a financial journalist back then. And all I did is to go to trade fairs all the time. I consumed my shoes, going up and down the different alleys, talking to different people. And so getting my name out there was the first thing, my personal name, and trying to promote the name of the company. At that time, in 2002, no one knew the company. Merger Market was a brand that no one knew. But then I quickly understood that in order to be reaching the bankers, the investors, the lawyers, and I needed to have something and up my sleeves that no one else had, which is the connectivity with the entrepreneurs. So as I said, I was going to all these trade fairs, calling all these executives and getting information out of them, interviewing them. So then the bankers knew that every time I talked to them, I had something to give them, which was my knowledge of the industry, which they were desperate to get.
It sounds a little bit like deal flow, right?
Exactly. So had I done a different approach where trying to engage with them first, they would have thought, okay, you are trying to get information out of me, which was not what I was trying to do. It was, and I always tell people, you need to be a partner in the industry. Imagine you are a service provider. What's the thin line between a service provider and a partner? If you are seen as a service provider, you're not one of them, which means you are treated at a lower level. If you are a partner, means you're speaking their language, and then every time you reach out to them, they'll respond to your email, calls, and so on.
Yeah, and that's very true in Australia market. Definitely,
Yeah.
definitely. So do you feel that when people are making their decisions in investments, what would be the main driver? Would it be a psychology side of it or more of a financial data side?
As much as people say that decisions should be data-driven, I think that the instinct is still prevails. But let me answer this in a different way. So imagine you need to invest in a business. You are a private equity firm or a company looking to make an investment. You can have all the data available, but that data is dry. So what do? You need to look at the team behind that company, behind that investment. Charlie Munger, which was the partner of Warren Buffett in Berkshire Hathaway, said, you cannot make a good deal with a bad person. So the first thing is you need to assess whether that person is a good person. Point number one. If that is the case, then you can further analyze the person, and then the financial data is given. You should have that solid data, solid performance. I spoke to an investor last week, and he said, look, I'm not looking at the annual report. I completely disregard because it's a marketing tool there. So I want to know the people that are behind it. Earlier on, I did a podcast with a firm in the US, and I said, how do you define track record? Imagine a private equity firm and everyone claims to have done a deal. How do you know if that person was the person that actually originated that deal and worked on the deal? And he said, well, actually, it's very difficult to assess it at first from a press release, from an announcement. But when you meet with them, you know that if that person speaks about that transaction knowing the industry, and if they know the industry, means that they have done the due diligence themselves, as opposed to talk about it because they read a few presentations that the team made available to them. So that's a massive differentiation. So the investment comes from the data, which is a given. It's becoming a given.
Yeah.
Then analyzing the people is what matters. And also analyzing, let's imagine you are investing in a stock or in a particular company without knowing the person. You want to know if that business is ethical enough. And I'm seeing it more and more. So does it meet your values? Is it a business that investing in something that is improving the environment, for example? So that's another factor that needs to be taken into consideration.
So I was going to ask you about capital markets, but I think that's really interesting. So are you seeing a growth in impact investing? Is that where things are heading?
Yes, it is. And then I'm doing quite a few podcasts on how sustainability can lead to superior returns. So people are very skeptical in the capital market. And you heard from some of the red states, so-called red state in the US, in South US, where they are withdrawing money from some of the largest asset managers because they invest too much in ESG.
Yeah, and you can't get insurance if you don't have ESG policies.
Exactly.
Yeah.
Exactly. And then the narrative is first, I get my returns, and then if I do get some impact return, then good. Otherwise, I don't care. But actually, there are ways to demonstrate that you can get superior return by doing sustainable investment. But the problem is that there are not that many players that are vocal enough to convince the rest of the industry. In Australia, we have a great example with Leapfrog. Andy Cooper is a great advocate of that. but you need to have bigger voices. And that's what's needed in the impact world.
Have you got something you can share where there has been a big voice that has advocated for an industry change or growth in your experience?
So Andy Cooper, as I said, is one example. In Europe, there is Sir Ronald Cohen, who is the founder of Apex Partner, which is a large asset manager. There are a few others. So, for example, I was a guest on my podcast. Connor Keough is a former G7 member of the Impact team and emeritus partner at McKinsey, also advisor of BlackRock. So there are these influential figures. One thing that I've noticed is that you have too many voices, one, and too many consultancy and bodies and metrics. So how do you standardize those and say, okay, this is the metric that we need to use to look at decarbonization. This is the metric that we need to use to look at these other topics. So this is probably the biggest challenge that the industry faces. And if you have too many voices, then you don't have a united voice.
Yeah, that no one knows which direction to go in and what's working.
Exactly.
It's just, at the pendulum side of it, there's people that are saying they're making 30% returns on impact investing, and then there's other people that are pulling out of it because they're saying that there's no money in it and it's not working. And so where is that middle ground?
I think the starting point is, what are your investors? Are you aligned with your investors? So think about pension funds. Pension funds invest the money of the workers. And I'm father of two children. I'm worried about the environment that we will leave to our children. So as a pension fund, the pension fund should represent the voice of the retired people and the workers. And not say, look, my main goal is to make returns. So if the alignment starts between the investors and the private equity firm, then you can get the returns. And you don't have the pressure from the investor to say, look, you've done an investment in impact and you got 25% instead of 35. Why did you do that? So it's a mind shift and it's a land alignment. And think about how much of your carry are you willing to put at stake when you do an investment in impact? Are you willing to say, okay, have you reached your goals and therefore you're going to get your money or more money? Because at the end of the day, people work on money incentives. And the same applies for the founders of those companies. If the private equity firm is able to craft good metrics to incentivize them from an impact point of view, you can see that this will change.
Yeah. But I guess it does then go back to education
and
policy and following, people are pushing to go a certain way, hence insurance companies and the funds that are out there.
And if I may add, there was a study made by PwC, I believe, a couple of years ago, asking, I don't know, a couple of thousand CEOs and asset manager, would you be willing to sacrifice some return to invest in sustainability, and how much would that be? And I think that was 0.5 or 1%. But that was the right question maybe 2-3 years ago. The question is right now, do you understand that if you invest in sustainability, that's for the long run and you're going to make better return? I think that shift hasn't happened yet.
No. So what do you feel that needs to change?
I think you need, with everything, you need one big voice that shows that this is happening, and then everyone else following. We have lots of good voices, but not as big as maybe others. You need, so you have Larry Fink from BlackRock is amazing. You need someone like him beating the drums more and more frequently.
So is it the person or the industry? So obviously in Australia here, there's been a huge focus in hydrogen in investing. Is that an opportunity there?
It depends on who you talk to. So lots of people see that as an opportunity. Some others say, and maybe because you need education about, okay, is this an opportunity that is expensive right now, but the price will reduce in the future? And is there enough technology to transport and store hydrogen? I think that education hasn't happened properly, not just in Australia, but in other parts of the world. And is this a cross-border opportunity, or is it confined to that particular country? So no, I do think that hydrogen is an opportunity for the future, which is not understood yet. And it's probably like solar was 20 years ago and wind was 20 years ago. It took many years for everyone to adopt it. And if you walk around or drive around here in Sydney, you see more and more houses.
Well, it's oversubscribed in some experience in the sense that people are now having to pay to put power back onto the grid. But anyway, I don't want to go down that route with you. You've got so much more talent that I want to talk about. So there's a lot of organisations, and obviously this isn't necessarily from a fund, but maybe we can make the line of the connection between funds and organisations, and really large organisations that have the net zero aspirations. And they've set some dates, and obviously countries are doing the same. So how is that driving impact or capital markets?
It's a good question. And again, think about all these companies as a big ocean. I'm just thinking as you're asking me this question, it's a big ocean. And again, within the ocean, you have the different islands. And how can you discover the island if you don't sail close to the island? So I think at this stage, we have too many. Imagine being in the deep ocean, in the Pacific, where you have lots of islands, and you're trying to see where to go, where to put your boat. So we are sailing close, but not too close. So people in the market, imagine the people in the market, the ones in the boat, and trying to go as close as possible to the island, which is like a concrete example of a net zero target and so on. I think we're not there yet. So the question is too big the universe and too many standards and metrics. And again, if you have too many voices, then it's difficult to have one voice.
But that's how you change behavior, is you set these parameters that are often difficult or unachievable or seem unachievable at some point. But that's where innovative and ingenious comes out to solve the problem, because that's the policy, or that's the direction, or that's the KPI that you have to meet.
It's also an issue with I wouldn't call it press, because to me it has a bad connotation, but think about generative AI and all the coverage that you had so far. There is a big hype, and now people are rethinking, and is this too much of an energy consumption, because you need a lot of water, a lot of energy to feed into that. So you need to move away from the initial hype and think about, okay, is this technology going to help us in the long run? And how do we need to do to make this technology a scale? I think we are still in the infancy of that journey, where you see a few proven technology, for example, in waste. Can you name one technology that everyone knows in waste globally? There might be, but I can't think of any. So if I can't think of any, then maybe lots of other people can't think of any.
Yeah. So you think it's a communication issue?
It's a communicating all around. Sorry, let's redo it. It's communication all the way through. So you think about the message about reducing the temperature by 1.5 degrees. So you need to start very early on and communicate and say, okay, if we do this, that's the consequence. If you do this, it's the consequence, and continuously insist with this narrative all the time. And the same with the technology. So if you use the technology, you're able to recycle better. If you're able to recycle better, there will be less waste. Less waste, less pollution, et cetera, et cetera, et cetera.
And I guess then it goes back to where we started our conversation. It's the behavior.
Yes.
It's people's behavior, and people obviously get set in their ways. And so it's thinking about, how does this behavior impact where we're going and what we need to do and what needs to change?
Exactly.
Yeah, I agree. So on to another topic. We have an amazing lineup coming up for CapTech in November 24. And you're a part of the panels, which I'm really excited to hear you interview some amazing talent on stage. Why do you think people should attend CapTech?
Because it's a blend of different industries and different stages. And there is this book called Range. I can't remember the author, which talks about you needing to understand and grasp different industries and being able at doing different things and connecting the dot. So I think specialization is good. And I'll tell my children, you need to be specialized in something, but you need to be able to understand and learn and be able to talk about lots of different things.
I
So
love
coming to
that.
the conference, then you can hear about real estate, you can hear about technology, you can hear about AI, you can hear about credit, you can hear about equity.
Yeah.
So then when you leave the conference, then you're gonna think, okay, how do I link, for example, investing in real estate, and how can insurance help investing in real estate? Okay, so then climate is changing. So then insurance companies are rethinking the way they insure real estate. So that's a good connection. And then what are the technologies there that can facilitate that? And then what are the structures that you can put in place to finance a real estate project? And is equity better than that? So I think having a conference with a lot of different topics across different sectors will stimulate the brain to connect even further dots later down the line.
Oh, absolutely. And I feel that it will help solve problems. So an issue that might be having or happening in the education sector, there could be a solve that's happening, or someone that's already in the real estate sector that is coming there to look at who have speakers on that stage and learn from that, but then be able to invest in another program or develop or have that technical mind to be able to solve that issue in another sector. And it's about cross-pollination. And at the end of the day, we are looking at diverse portfolios and investing in different areas of the world. So it's a great opportunity to discover what are the other opportunities that you may not already be in because you've been focused in one specific particular area.
Yeah, and people say they don't have enough time. Actually, I recommend everyone to carve out 1 or 2 hours in a day to read and switch off the phone, switch off the email, and just focus on reading. That time is the time best spent. I'm very fortunate because I have a job where I work really early in the morning with the US, and then I have a big break during the day, and then I continue working early afternoon till the evening with Europe. So in those few hours where I don't have anyone emailing me and messaging me, then I can focus on reading. And
What do you suggest? What do you read?
So I read in my current role. So in the last few years, I've read lots of books about products.
Yep.
Hacking Growth is a good one to read, but also on marketing. And also, and of course, psychology, neuroscience, because you need to understand the psychology of a person. You need to understand what is the best way to put your message across. But also, if you are building a product, you need to know how the best way to build the product. I always recommend this book called Building a Story Brand, which says everything like a movie or a story, a book, follows the same 7 patterns and same 7 steps. So there is a hero who has a problem, and then he needs a guide, and he meets this guide. They will give them a plan, which results in an action point, then will then avoid failure and result in success. So if you think about it, this conference the participant is the hero, has the problem. So they either need to know about real estate or they need to know about something else. So you set out the guide, you help them navigate all these difficulties that you might have. And then there is an action plan. The action plan is to come to the conference and meet people. And then if they met people and they took advantage of the conference, then they might develop new relationship, which means they might solve the problem they have, so they avoid failure, and then it results in success.
Yeah. And so all business starts with a relationship. So it's a good place to start.
Exactly.
Building global relationships at CapTech.
Exactly.
Fantastic. Well, thanks for your time today, Giovanni. I feel like there's so much more we can get from you, and I'm looking forward to seeing you on stage at CapTech and in person. So we'll have lots of one-to-one meetings that we're setting up for our participants. So welcome and thank you for coming.
Thank you, Sarah. It was great.